1 in 4 mortgages are now at risk. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. Let's have a look at this article written by Eliza Babin for Yahoo Finance. So the golden rule, 1 in 4 homeowners are breaking, everyone, because it's all good times in property. I mean, let's just look at some prices here. We'll go to the asking prices. We'll bring up Sydney, everyone, so we can all just see that big climb. 1.7 for all houses, 1.5. 1.5. What about Melbourne? A little bit more reasonable, I hope. And reload this page. There you go. You're looking 1.1 for all houses and 1 million and change for 3-bedders. Slightly down week on week. And then Brisbane, my hometown, which, well, 894 for all houses and 786. So, because we've been anchored now looking at the Sydney and Melbourne prices, these seem reasonable. But you have to realize what it was just, in February. It was 660. Now all houses have skyrocketed, guys. Okay? Look at that climb. Look at that climb. We're catching up to Melbourne and Sydney. This is what happens. Those markets cool down, the other cities catch up. So, Australia's booming property market has put homeowners on the back foot when it comes to paying off their mortgage. Almost 1 in 4 new mortgages are considered risky, according to new data released by the Australian Prudential Regulation Authority. APRA's ADI Property Exposure Report for December 2021 found 24.4% of new mortgages had a debt-to-income ratio of 6 times or more in dollar terms. 6 times or more. So that makes it risky. So when the government, let me have a look here. Wait, I want to bring up this one. When the government came to the rescue, okay, we've got them juicing the market. Here, there's 2 things I want you to pay attention to, is the 5% and the 2% government loan guarantees. Now, if you can't save a deposit up, which I understand it's hard, it's really the hardest part about all of this. Are you going to be able to borrow? Or are you going to be in the pool of now risky mortgages where you've got more than 6 times your income? So this is up from 23.8% in the September quarter. A year ago, it was 17.3%. Debt-to-income ratios of 6 and over are considered risky by APRA. In fact, analysis by Rate City found that to buy a median-priced house in Sydney, you would need a household income of $188,000 to avoid taking on a risky loan. So 190 grand, everyone. Just a median house. That's when 50% are below and 50% are above. We're not talking a mansion here. Nearly 200 grand. Nearly 200 grand, guys. It's getting... This is how you can have people earning, or families earning hundreds of thousands of dollars and just struggling. And then they appear in an article about ABC, thankful for mortgage holidays is keeping them above water. It's kind of sad. In Melbourne, the income needed to have a debt-to-income ratio of less than 6 was $133,000 a year. This comes after new ABS data found residential property prices recorded their biggest annual rises on record, up 23.7% in 2021. However, the latest CoreLogic data shows growth in property prices is starting to cool in 2022. In response to rising debt-to-income levels, APRA increased the rate at which banks stress test mortgages from 2.5% to 3% on the 1st of November 2021. It's no surprise that risky lending rose at the same time property prices skyrocketed, Sally Tyndall said. Almost 1 in 4 mortgages settled in the December quarter had risky levels of debt compared to their household incomes, the price many Australians had to pay to get into an overheated property market. Yeah, but isn't it always overheated? When's the last time... Can anyone watching remember when housing affordability wasn't an issue in Australia? Okay, can anyone remember? I'm trying to think back. So rate hikes are coming. While there are signs property prices may be cooling, mortgage holders are waiting on inevitable lift in the cash rate. After a series of RBA interest rate hikes, we could see APRA reduce its serviceability buffer back down to 2.5%, Tyndall said. Most Australians with home loans are in a good position to tackle the forecasted interest rate hikes head on. Tyndall said mortgage holders had a whopping $231.68 billion in offset accounts, which may offer a decent buffer when rates rise. And that lines up with what the RBA is saying, guys. We'll have a look here at a few things. You've got negative equities going down. You've also got people that have made prepayments and buffers. You've got indebted homeowners, outright homeowners, and renters all have buffers. So the question is not when rates rise and people are starting to people be forced out of their houses. What's going to happen is you'll see Sydney and Melbourne cool, properties go down. I don't think we're going to see a huge crash. There's too much immigration demand for that, but you'll start to see other markets heat up. So let's have a bit of a talk. Hang on. Wrong chart. Well, you all saw what happened in Brisbane, guys. You all saw property prices going nuts. It's just crazy. It is just crazy. I was talking to my mother the other day. She got a little place down the Gold Coast, a downsizer, a little attached house under 250. So she could sell up the family home, downsize in this small 2-bedroom place. It's not over 50s, which she likes, so it's normal people there, but it has a pool, a tennis court, it's all maintained. And it's not a complex construction, so you're not looking at a multi-story building, you don't have a lift, any of that stuff to deal with. So perfect. She got it a few years ago for not bad money. I mean, it's what you expect. Now, stuff in the same complex, same size, little 2-bedders, we're talking little brick veneer attached things, 1-story high, $380, everyone. In my suburb, stuff's going close to $1 million, and we're not talking a posh suburb, everyone. We're talking, out from Brisbane. You got the working class old steel mills over that way, everyone. Too bad it doesn't get me any cheaper steel, but there's a good scrap place closer where I can sell my scrap. But look at what we're talking about here. Property's just going nuts. So in Brisbane, it's heating up. Sydney and Melbourne are going to cool down. You'll get people that will sell out of Sydney and Melbourne, and they'll be looking at other cities to go into. But then we also have foreign investors coming in. You've got foreign migrants coming in. Our population growth hasn't reached the level where it was in the past. We'll have to see how it goes. This next election is going to be interesting to see what they do. If there's people that are concerned with cost of living, I think that will be the major issue. Fuel excise is going to be a point of contention. I don't know how. What you're going to see is you've got all the minor parties like UAP, all the ads are still focusing on lockdowns. I don't think that's going to reach a significant number of people. I think there's going to be a core audience they've already got, and they might solidify and hold on to that, but I'll be shocked if they get more than 3%, to be quite honest. This election is going to be on housing affordability and cost of living. We're going to see a lot of people are going to be in trouble with their mortgages, and that'll manifest in reduced retail spending. They're not going to go out there and spend as much. They're going to tighten the belt, and they're going to realize what is a luxury and what is actually a necessity. What do you reckon? What do you think your take is on this one, guys? Are you worried? I don't think we're going to see this mammoth housing collapse that everyone's been hoping for. I don't know. We're not America, guys. And there's going to be... They'll do everything they can to keep it going. It just has to keep going long enough for government intervention here in Australia. We've seen it already. Maybe I'm just becoming too cynical. Anyway, thanks for watching. Like, share, subscribe to the channel. Let me know your thoughts and opinions on this one in the comments below. If you want to support us, there are a few ways you can. You can join us on YouTube or Patreon. Sign up for SelfWealth or Stake, or use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. Take care, everyone. Have a great day. And I will refer you to a video I put out earlier today about a Queenslander falling over. The dangers of construction. This is why I'm really happy my house over there has got many more props under it than the one in the image. See you next time.